Good evening, everyone. My name is Paul Young. I'm just going to walk you through the Alberta economy and just give you a kind of an outlook in terms of from government policies and what's actually happening. This is a little brief bio about myself. I'm a CPA, CGA by trade. I've got over 26 years of business experience that expands from academia to financial solutions to corporate reporting and taxation. My agenda will be is looking at GDP numbers. I'll look at growth. I'll talk a little bit about manufacturing, competitiveness, and basically the main indicators in the economy in terms of what's growing it. So if we look at GDP now, these numbers are going to change based on 2015 due to the economic downturn in the oil market. But into 2014, this was the time where Alberta had turned the corner and actually became the second largest economy on a per GDP perspective in Canada. That likely has now changed. Quebec's probably surpassed it, but it's something to bear in mind how far Alberta has come over the last decade. And the key aspects of the Alberta economy most people know are oil, gas, agriculture, mining, and forestry. Now if you look at GDP growth here, you're seeing basically it's been very strong in a lot of cases in Alberta for the last close to 2 decades. They've had pretty good strong economy when we had some low oil trends in the 90s. But now what you're seeing now since 2015 and into 2016 is a huge drop off in the price of oil, which considerably impacts Alberta as well as Saskatchewan and Newfoundland. So that puts pressure on the Treasury as well as other aspects of the economy that impact consumer spending. So if we look at manufacturing sales in Alberta, it only makes sense that they're down year over year from 2015 by 14%. When you factor in the change in oil prices and the volume of exports and all that, you're seeing a decrease big time in terms of what's impacting. And this gives you an idea where the biggest shift has been, and mostly it's petroleum and coal, which is the energy sector in general. Now, Alberta is still, in the last report in 2015, was still a top destination for foreign direct investment, and foreign direct investment is critical in terms of it opening up and expanding projects because Canada is a limited market and needs foreign capital to do that. So you're seeing anywhere from 20 to 25% reduction of capital spending in the oil patch area. Key comments. Now Alberta is landlocked, so it depends on pipelines and freight to move its products to market. And recently they approved a natural gas energy plant in BC, which will help the Alberta economy. But Alberta needs oil pipelines in order to export its oil to export markets, because oil in general is about 1/3 of exports, is about $133 billion business to Canada each year, and because it's significant, it impacts the Treasury both provincially and federally. Competitiveness. Now in Alberta's case, they're pretty competitive in terms of the labor markets. However, with the transform of a new government in Alberta, they're moving more and more to clean energy. That clean energy is going to put pressure on the power costs, because as they move to wind and solar, those are more expensive, and if they put the load factors into those things, they will add basically more cost to power, and that will impact heavy industry in Alberta. Alberta's red tape, since they've changed government, the Canadian Federation of Independent Business hasn't been able to do a proper assessment, but previous NDP governments bring in more regulations and red tape. We've already seen that impact on the carbon pricing in terms of hitting the agricultural sector, as well as some WSIB policies towards farmers. So you're seeing where more red tape is being introduced in Alberta. Housing starts. Well, like anything else, when you have a slow economy and recession, you're actually going to see a fall down in housing starts, and that's what you're seeing. Basically what happens in terms of units, what they expect to happen in 2016. And we're also seeing a lot more foreclosure pressure on there, because people, as I said, with the economy being so slow, there's job potential and job losses. Retail sales have continuously fallen on a decline, and that makes sense when you're in a recessionary place. Most people are cutting back on what they spend because they don't have the money, and that's what's happening in Alberta. Household spending. Alberta is one of the lowest cost areas in terms of housing, food costs across the country. However, there's impact it's going to influence that. You're actually seeing job losses, hours cuts, because they're looking at areas like minimum wage, which will drive those potential aspects of reduction in employment. The other thing is the impact of carbon pricing and the new philosophy there could add to 6 to 8% to household costs. So that could add to our already struggling family budget in Alberta another $800 to $1,500 in costs. Now the provincial governments offset that with some sort of tax credit program, but it's not going to mitigate the whole impact. Employment. We've already seen the impact of there's less jobs in Alberta from the oil patch out to other things. So if you're not spending money in business, the whole the whole down spiral of in terms of costs, in terms of influence on the economic trends, will be influenced by employment. Where are the jobs? Typically in Alberta's case, government's on a big incentive to put capital investment out there. So most cases those jobs will be in that sector as well as probably the service sector. But the thing to bear in mind here, and that in most cases in Alberta you're seeing a lot more increase in part-time jobs, which makes sense because business is hesitant to hire people when they're uncertain in terms of where their volume of business will be. I want to bring in now to the next few slides talk about government deficit. In Alberta's case, when Premier Notley took power, she basically was dealing with a fallout in the revenue, and therefore there was pressure on the Treasury. So they're actually seeing a fall down in revenue year over year between 2015 about $7 billion. That's pure revenue gone. So the government now has increased spending as well as basically looked at other aspects to stimulate the economy there from capital spending and all that. The problem is now you've got spending here. Until you get the revenue into play, you basically have a structural deficit now that's going to grow the debt to approximately probably like $34 billion by the time it hits 2018 to 2019. Now, if you look at the overall financial statements in terms of its cash position and where you're seeing in terms of where the government stands on, the overall debt is what you need to kind of look at and keep that into play, because the debt side has to be paid down at some future point. So the next slide I'm going to talk about to you is talking about the Alberta debt. Basically, in 2016, the debt started to grow to $10 billion. Now it's predicted to be at $33 billion. That being said, the next slide is critical to understand what's going to happen here. Many institutions like the Fraser Institution have come out and said that basically Alberta now has significant challenges to bring down that deficit as well as the debt. Now I'm put some scenarios out here to kind of look at things and potentially what may come into play as part of the policy discussion. One is, unless they get royalties back up, that's an issue that's going to put pressure on the Treasury. So I assumed a certain point that royalties likely may come up to, but they may not be to where they were at the $5 billion mark. They may come back up to about $3.6 billion. So that's additional revenue that they may see in the government. That being said, even if you go at modest growth rates, 2.5% to 4% on personal corporate taxes, it's still going to leave a downfall, a shortfall of likely about $2 billion initially, which I believe at some point the government may introduce a provincial sales tax of about 2 or 3% to bring down that deficit. Now, I'm not saying they will do that, but they're setting the tables potentially for a sales tax at about 3%, which would be, if they were to introduce it in 2016 to 2017 budget, which likely won't happen, but if they're introduced in future periods, it will likely bring a windfall in year one of about $2.2 billion. Now there's other factors into play here too, as right now Alberta contributes money into a fund as a part of equalization. And the equalization method is based on GDP growth. Since Alberta is in a recession, it'll be interesting how that plays out in terms of equalization plan, in terms of does Alberta move into a have-not status, or how's that going to happen? The other point of view that comes into play is government transfers are going to be kept at 3% growth. So there's going to be pressure on that money coming in to support healthcare. So there's going to be significant challenges, whether it's the NDP government or future governments, to look at the structure of Alberta's government, because Alberta's got one of the highest cost governments in Canada. At some point that has to be addressed as part of the overall program delivery. So this is just a scenario to get you speaking to your members of parliament, whether it's the Wild Rose Party or the Conservative Party, or even calling out your NDP to ask where their gap action plan is on both debt as well as deficit, because every time you add that the deficit in, it adds to the debt. So at some point that $33 billion debt has to be paid down. And how is that going to be paid down? From either increasing revenue or cutting program spending. That was done in terms of the gap action in previous Alberta governments. So that's something to bear in mind, the impact of what those decisions will be made over the longer term as the government rolls out their financial fiscal management cycle, as well as you go into the next provincial election. So this presentation was kind of give you an Alberta overview, but also to focus on questions that you need to ask as your ministers of parliament. Thank you.